Welcome to The Explainer. Today, we're going to talk about a company that's it's probably powering the device you're watching this on right now, but you've likely never even heard its name. TD SYNNEX, ticker SNX. You see, this company is a true invisible giant. Think of it like the essential plumbing of our digital world. It connects the huge brands you know, like NVIDIA, Microsoft, and Dell, to all the businesses that actually build and run our digital infrastructure. So here's the real question we're digging into today. Is TD SYNNEX just a simple, low-margin box mover, a logistics company really, or is it about to transform into a high-growth AI powerhouse, building the very foundation of the future? Let's break it all down. Okay, so to really get this, we first need to pull back the curtain and understand what these guys actually do. They operate as the hidden backbone of the entire tech industry. At its heart, TD SYNNEX is an IT distributor. The best way to think about it is like a massive, specialized Costco, but for technology. Instead of toilet paper and TVs, its shelves are stacked high with servers, software licenses, and every other piece of tech you can imagine. They buy an enormous bulk from the manufacturers and then sell it to a huge network of over 150,000 other businesses. They're the critical middlemen. And to give you an idea of the sheer scale we're talking about, look at this number. In their last fiscal year, they brought in over $62 billion in revenue. That makes them the largest IT distributor on the planet. The main takeaway here is their size and reach are just unparalleled. But you know, that huge traditional business, that's not really the exciting part of the story. No, the real action, the thing that has Wall Street buzzing, is the company's secret weapon, a special division that works directly with the world's biggest cloud companies, the Hyperscalers, like Meta and Google. The CEO has this great way of explaining their new strategy. He calls it a two-speed business. On one side, you have the core distribution. That's the stable, cash-generating supermarket model we just talked about. Think of it as a reliable family sedan. But on the other side, you've got the rocket ship, their Hive and AI solutions division. This is the high-growth, high-margin engine, custom building entire data centers for the giants of the cloud. One side provides the stability, the other provides the explosive growth. And you don't have to take my word for it. The CEO himself laid it out on their last earnings call. He pointed to over 50% billings growth and stressed their unique ability to create these custom rack-scale solutions, which are basically ready-to-go server blocks for the biggest customers in the world. And the killer line was, "We see no slowdown in the demand signals." This right here is the engine room of their whole AI play. So the strategy sounds great, right? But talk is cheap. Let's see if the numbers actually back it up. Is there really proof in the profits? Let's look at the latest report. First, let's look at the top line. Gross billings for the fourth quarter shot up an impressive 15% year over year. Now, in an industry this massive, seeing double-digit growth is a really powerful signal that demand for everything from basic hardware to complex AI systems is strong. But this is where it gets really interesting. Their profitability, measured by non-GAAP earnings per share, jumped a massive 24% in that same time frame. See, when your profits are growing that much faster than your sales, it tells you something crucial. It means they're not just selling more stuff, they're selling the right stuff, the high-margin AI solutions. The strategy is working. And now, for the number that's at the very heart of the bull case. Billings in that critical Hive segment, the part building custom AI data centers, exploded. We're talking over 50% growth year over year. This isn't just growth. That's what you call hypergrowth. And it's this number, more than any other, that's making people believe this transformation is the real deal. So all of this has created two very different, competing stories about the future of this company. It's the classic bull versus bear debate. All right, so the bulls, they are looking at some massive tailwinds. First, spending on AI data centers is set to grow like crazy, over 30% a year, and Hive is perfectly positioned to capture that boom. Second, their destination AI program is opening up a whole new high-margin business, selling packaged AI solutions to companies that can't build their own. All of this is backed up by Wall Street analysts and the company's own confidence, which you can see in their new $1.2 billion share buyback program. But it's definitely not all smooth sailing. The bear case focuses on some pretty serious external threats. For one, with over 60% of their hardware coming from Asia, they're highly exposed to tariffs and geopolitical tension. And that super fast-growing Hive business, it's heavily concentrated with just a few massive customers. If even one of them decides to slow down spending, it would be a major blow.
And of course, the core business still runs on razor-thin margins. Oh, and the CEO did recently sell a significant block of his shares.
And this isn't just a theory. Some institutional analysts have modeled a pretty tangible worst-case scenario. If hyperscaler spending cools off just as new tariffs hit, the stock could potentially see a significant drop, maybe down to around the $120 mark. So yeah, the risks are very real.
So, with these two competing stories, what should you be watching for next? What are the key signposts that are going to tell us which way this is heading?
There are three key things to monitor. First up, the very next earnings report. We need to see if that demand from hyperscaler customers is still red hot. Second, keep your ears open for any news on trade policy, especially when it comes to tariffs on tech hardware from Asia. And third, watch for any announcements of new major cloud clients for their Hive division. That would show they're successfully diversifying their customer base, which would be a huge plus.
And that brings us right back to our central question. TD SYNNEX is already a giant, but its future value really hinges on this transformation. Can this invisible backbone of the tech world leverage its incredible scale to become an indispensable AI kingmaker? That is the multi-billion-dollar question the market is trying to answer right now.